corporate banks is a better term to use than public banks, because the pain is equal in public corporate banks and in private corporate banks, and I think now the markets, everyone seems to agree on that. And I have seen that it is always advantageous to be better in a cycle than be late, because it's on the way down that you can get lots of volumes, it's on the way down that impact costs are less, and on the way up you look at what has happened to, for example, an ICICI bank in 2 days. So now if you start buying and large funds want to start investing in that space, it becomes more challenging. So transition years always have been painful for us, 99, 2007, 2015. But I think there is now reasonable indication that things are falling in place, and this leadership transition, I think we are well on our course in that.
Yeah, sure, thanks. Naren, just quickly, you've always been sort of a contra, sort of looking at the other side of the bets in terms of, where probably a large part of the market is ignoring or have been beaten down, and that clearly shows up, in the funds that you've been managing, the top 100 or the dynamic equity, where you're currently overweight, say the energy, telecom, where you can see consistently most of the other industry participants are sort of bringing down the allocation, utilities, another sector. So just wanted your thoughts on how do you really, what is your philosophy behind, the way you pick those ideas, and, maybe you could just give some comments around it.
So each year when you come to the Morningstar conference, I find that something becomes contrarian. Last year is not contrarian this year. Last year, for example, oil and gas and metals was two sectors where I was telling people in the last year's conference that it is the contrarian opportunity. So I'm glad to see, if you go back 1 year back and ask people what will happen to oil, people gave wild low estimates, and people actually, the same thing was true for metals. So this year, if you look at it, I believe that most of us in this audience can't stay without their mobile phones for more than an hour. And a mobile phone is possibly more important than what they have in their purse for most people in this room. So I think that's a simple contrarian sector at this point of time, given the way people are across the world and how important mobile has become. So I think to me that appeared as a contrarian. See, when you're a contrarian, you have to do your calculations. Otherwise, you'll end up buying some infra stock which will go bankrupt, some metal stock which will go bankrupt. So we do our own calculations. On that basis, actually, today, for example, this last 6 months, we have been massively underweight technology, because what we saw is one of the main users, which is global banking companies, are in such bad shape that how can they invest in technology? That was our theory. So that has kind of played out. So now we are relooking whether the combination of the market cap earnings justifies slightly increasing the weightage, but we have not yet done it. So I think on a continuing basis, I think contrarian opportunities will play out, and they are contrarian because the rest of the street is not willing to accept it. So at the time you are buying, there has to be discomfort, but that discomfort is only at the time of buying, not in eventual returns. So, and that's what we've seen over a period of time. In 2007, being underweight infra was being contrarian, and it played out beautifully. So I think that way you'll have to be, you always invest for the medium term when you invest through a mutual fund, and I find that contrarian strategies really help.
Find us on Facebook at facebook.com/ETNOW, and don't forget to click the like button. You can also follow us on Twitter at ETNOW Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNOW.